too damn high is right, and people are pretty fed up. They know this time they're not being fooled. I mean, I've sat through now 5 days of hearings in the Resources Committee on the issue of drill here, drill now, drill faster. Now we can fight over drill here, drill now, drill faster versus a greener energy future, alternative fuels, conservation of renewables. But guess what? Either of those things are way, way, way in the future from this Memorial Day or next Memorial Day or even the Memorial Day after that, when the oil companies traditionally jack up the prices to the highest the market will bear, and then after that they usually ease off a little bit after they've run up their second quarter profits. But now we're not just dealing with the oil companies. We are dealing more with greedy speculators on Wall Street. They are exacting a higher price per gallon than ExxonMobil out of the American driving public. It's not always been this way, and it doesn't need to be this way. The simplest, quickest thing that the United States Congress could do would be to totally repeal the special rules that were put in place for Enron, allowing excessive speculative activity in the commodities markets generally. This could help us both with food prices and definitely with gas prices. Goldman Sachs, not exactly a consumer-friendly group there, they say that basically the premium for speculation per gallon they'll be paid this weekend at the pump by Americans filling up is 64 to 80 cents a gallon. 64 to 80 cents a gallon. So billionaire hedge fund guys on Wall Street who pay taxes at half the rate of an army captain in Iraq can get richer yet manipulating the market. Now, the Commodities Future Trading Commission took the first step to prosecute manipulation from the last big run-up, 2008. And what's the Republican reaction? They propose this week to cut the budget of the Commodities Future Trading Commission so they can't enforce against speculators. So we're proposing, let's ask speculators to carry a little bit of the load. Let's put a very modest tax on speculative activity. It's a very easy thing to do. The world is divided by law into speculators and hedgers. Used to be hedgers were 75% of the market. That is, people are actually going to use the commodity, use oil. You're a railroad, you're an airline, you're a trucking company, you're a manufacturer, whatever, and 25% speculators. Now it's over 70% speculators and 30% hedgers. Well, let's put a tax on those speculators that will decrease speculative activity, drive down prices for American consumers, and raise a little bit of money to help us fund the Commodity Future Trading Commission so they can investigate more market manipulation. A win all the way around for American consumers, and the only people who have to carry a little bit of the load are the people on Wall Street. So, as I said yesterday on the floor, the family is struggling. There are a lot of staying home, staycations. Those are going to go fill up 20 gallons. The Wall Street tax on that 20 gallons of gas is $12. That family's struggling to put the gas in the car and go and kick off their summer with the kids. The speculators on Wall Street, they'll ride down their private elevator from their penthouse. They'll get in the back seat of their limousine, and they'll cruise on out to their third house in the Hamptons because the Republicans have their back. They do not want to take on the speculators. They want to pretend we can drill our way out of this in the short term. We can't.
This particular.
Sure, yeah. Bruce was just addressing a financial transactions tax. This is more targeted and different. And there are volumes written on this, including the esteemed Larry Summers wrote a paper saying that were we to impose a minuscule tax on financial transactions, in this case we're looking at energy trading, that it would drive much of the speculation out of the market, stabilize prices. So this is a modest imposition, but these people trade on infinitesimal margins. 4 weeks ago now, in one day, there was more oil, twice as much oil traded in contracts on the mercantile exchange in New York by computers as is consumed by the world in one day. So it's a fairly extra. It's just plain and simple driving the price. I mean, when a barrel moves $5 in a day and nothing happened in the world, no refinery blew up, no one else went to war, no tankers sunk. Nothing, no oil rig blew up. Nothing happened. It goes up $5 in a day, and demand is down, and supply is up, and stockpiles are up. What's going on? It's the speculators, and there is a growing consensus around this. So we would impose, in this case, a very modest tax on speculative activity, and we would use the revenues to replace the funding for the investigators, for the watchdogs, the Commodities Future Trading Commission, who the Republicans want to cut. They need more resources. They need more investigators. Hell, they're just prosecuting the first speculator manipulation from 2008. They need to get up to 2011 and help us out here. They need more investigators and staff and lawyers and prosecutors. We got to go after these people, and that's where we would dedicate the tax to. So you'd see an immediate drop in speculation, and you would see more watchdogs. And then Rosa's point was so good. You know, we got a lot of really smart people who work for this administration, way too Wall Street oriented, in my opinion, but they understand Wall Street. And Timmy Geithner's got a lot of people who work for him. And he could say just at the proper moment to the president, Mr. President, I see a new height in long speculative contracts driving up the price today. Announce right now, the market's closed, that you are going to release from the Petroleum Reserve. You'd kill these people. They would be out there hanging out there long, and suddenly, bam, they wake up tomorrow morning and the market is down. You know, let's do some smart stuff like that. It's time to stick it to these people who are screwing the American people.